Good afternoon, ladies and gentlemen, and a warm welcome at this panel discussion of the European Retail Payments Initiative, as it was erroneously called by the colleagues from Currency Research, because of course we will talk about European retail payments, a retail payments strategy, but also the Retail Payments Initiative. So this is a little mix-up of the two. My name is Gijs Boudewijn. I'm General Manager of the Dutch Payments Association, and I'm very honored that I can moderate this panel. For those of you that have not seen Eric Ducolombier's presentation before we had our break, it will be shown on the GPS community and on YouTube, and I would also like to welcome people watching through LinkedIn. This presentation, this panel discussion will be broadcast on all three of the channels that I meant. Without much further ado, I will introduce you to our distinguished panelists. First, the first panelist is Martina Weimert, and she is the CEO of the European Payments Initiative Interim Company. Welcome.
Hi.
Martina. The second is Eric Ducolombier, who gave the presentation on the Commission's retail payment strategy before the break. And as I said, you can watch it if you missed it on GPS Community and YouTube. The third is Christian Schäfer, Director, Head of Payments and Products and Solutions of Deutsche Bank. And last but certainly not least is Martijn Snoep, Chairman of the Netherlands Authority for Consumers and Markets, or as we say in the Netherlands, the Dutch Competition Authority. So DG Comp, but then they're on The Hague. So our aim is a very informative and interactive and hopefully lively debate. But before we go into the debate, I would like to ask all panelists to briefly introduce themselves and explain a little bit about what they are doing and what their role in European payments is. So first, I would like to ask Martina to tell us a little bit more about the European Payments Initiative. So Martina, the floor is yours.
Yeah, so just as a brief introduction, the European Payments Initiative is, well, now the interim company, so the preparation for the market launch, all the things you need really to go ahead with this first initiative, which started as a feasibility study on the technical and strategic side. And now we are really building up what I would call the solution and trying to make everything ready for the market launch. What that means is that the European Payments Initiative will become a scheme with two major products, one on the card side, whether it's a physical or a virtual card, and then another one, which is the digital wallet, in which, of course, you can integrate your card, but which most interestingly, I think, offers also instant payments in a digital way. So an end-to-end digital payment solution. So two basic products combined under one brand, one scheme, which is supposed to bring really unique coverage and ultimately also to be accepted internationally. We cover four main retail use cases, so the POS, the E&M commerce side, cash withdrawal, and P2P, P2Pro. And we will also integrate a couple of value-added services, which we consider as most relevant for the European consumers, but also for European merchants. And all this is going to be so combined in what we call the API solution. API is just the initiative name, the project name, if you want. There will be a commercial name afterwards. And we will run on what is here on the slide, the gray layer, meaning on European SCTN's existing infrastructure for the clearing and settlement part. So we will have our own front-end solution. We will have our own, what I will call the connectivity or middle layer, and then we will run on European infrastructure, which is the same for SCTN's on the clearing and settlement side. All these services and the two products are going to be proposed to the consumer either through the mobile banking apps of the various participating banks, and on the other side, through an independent bank-owned app which is so a standalone app for those who maybe don't want to integrate it into their mobile banking app, but nevertheless make it available to their customers. So it's not a standalone app in the sense that the solution will not own any clients. It's going to stay the clients of the banks, but that's how we foresee the market rollout. So all these features are meant to be rolled out next year. So that's why we have to prepare everything. And the shareholders, so currently we have 22 shareholders, will have to decide by the end of the year whether they want to go ahead and give it a go for the real market launch then next year, starting with P2P, P2Pro, and then moving into the second quarter really for the launch of POS and E&M commerce value propositions. And then we will enrich the solution over time with new services. I think it's very important to outline that we have a massive innovation budget, which we consider as necessary to stay competitive in Europe. So that is for our rollout. Maybe if you can move to the next slide, please. So to summarize, what are the objectives of API? Well, first of all, we think that only by joining forces we can reach a certain level of efficiency and synergies. So we think that especially on the cost side, there can be strong synergies. If you think as what is the market right now, everybody is basically reinventing the wheel, nationally speaking, and with his own solutions. While we clearly have some successful solutions, but not everywhere. So I think it's absolutely crucial to harmonize and to standardize as much as possible, also because that is what the merchants require. They don't want to have national integrations. They would love to have one overall integration for Europe. So that's the first very important aspect. The second, as I already mentioned, is innovation. If you look at the competitive landscape, there are so many new features, new solutions coming up every year, and the competition has come to a very high level right now in Europe as elsewhere in the world. So only, again, by joining forces, we can make really a difference there. And then we would like to leverage instant payments because it's clearly a strong innovation for the market. It will allow consumers and merchants to experience different ways of paying and much more in adequacy with our, I think, time, which is more directed to real time. So that is something we would like to bring to the market overall and not just rely on cards. So this massive introduction of instant payment in retail, which is so far not existing. And overall, we think that we can bring a lot to European independence and sovereignty through this setup. Meaning we would offer a solution which could work everywhere in Europe, which could be accepted internationally. And we got already quite a lot of requests in this sense from other players, from the US, from Canada, from Australia, from India, from China. So we are very positive about the potential of the solution internationally speaking. And so we think by bringing European standards, by bringing a European solution, European consistency and harmonization, we will definitely contribute to European independence and support globally the overall European economy. And last but not least, I think it is our strong objective that we don't want to do it like the others. We want to do it the European way. What does that mean? That means, first of all, strong data protection. As we all know, this is very important for the European market and also given the European regulatory environment. We also are very keen on involving the merchant and consumer associations because definitely they have requirements, they have their own perspectives on what is needed for the market. So we think now is the right time to associate them. And last but not least, I think it's important to have in mind that we have our own quite different business model. We have a interchange-based business model, but then we have a second one, which is new for instant payments. And overall, we don't think we want to become profit maximizing, even though it should be underlined. This is a private undertaking. So yes, we want to realize a margin, but we are not going for profit maximization. We think there again, we need to do it the European way. And we want to bring this business model to life all over Europe because we think it's much more transparent and also more convenient for the European market. I think these are the objectives that all should have in mind when talking about the European Payments Initiative.
Okay, thank you. I consciously gave you a little bit more time, Martina. I have to ask the others to be a little bit brief on their introduction, but I think it's very important that the audience really understands the scope of the EPI project, and we'll probably get back to that later. I will skip Eric because I asked the organization to put on one of your slides of their presentation. We'll need 30 seconds for that. So I first go to Christian. Christian, can you please introduce yourself briefly?
Hi, thank you very much. And Martina, also thank you very much for the very insightful presentation about AP. I'm really happy we're making good progress there. And I can only encourage everybody to join it. It's a key initiative for Europe and for payments. He's asking the question what I do on a daily basis. I'm running payments within Deutsche Bank as a global business. Having looked to the presentation of Eric a bit earlier, I guess I will have a couple of very busy years ahead of me, making all of that happen, which is formulated as a vision, which we obviously fully support and endorse. And I guess we come to the key highlights a bit later. I guess in our business, it is important that we keep innovation and drive innovation forward. That is what we do with our corporate clients, as I'm a member of the corporate bank. And I think the key product there, as was mentioned, is instant payments, request to pay, both of which form global trends. Transparency like GPI is an important topic to us as well, to mention just a few of them. I think when we again look to the vision from the European Commission on the payment markets in Europe, I guess it's also fair to say that Europe is leading the pack in many aspects, be it the drive on instant, being the drive on open banking, open finance, which I feel is also very, very important. And in addition to the product innovation, I guess key in my day-to-day business is market development. I spend a big amount of time working with the other bankers on AP, which was a great effort. And thanks to Martina, really bringing us together as a coherent team and bring it to the next level, to the AP interim company, which I guess is the right step to take. And I guess it's also important for others to join this important initiative. I guess a next step from my point of view is really to take the step from PSD2, open banking in the context of open finance, towards the next level, that it's an open data economy. And here we're working on a working group together with Hayes, which is named the SEPA API Access Scheme that looks primarily payment but beyond. And also crypto is a key topic on my agenda. So I guess that makes my day pretty busy, Hayes. Hayes, you are mute. Hayes, you are on mute.
Because the organization asked everybody to come. I see a lot of questions already coming in from Mr. Birch, and you have to be a little bit patient until after the introduction, Dave, but we'll come to your questions. I would first like to go to Martijn from the Consumers and Markets Authority. Martijn, you've been pretty involved in payments as authority, as Dutch authority. So can you say a little bit about that?
Yeah, thank you very much, Gijs. Maybe by way of background about our authority, we are a multifunctional authority, so we are a competition authority, but also a consumer protection authority. And in addition, we have some of the powers, most of the powers, under the interchange fee regulation and the PSD2 directive. So our remit of our enforcement actions is a bit wider than just competition. And our mission is also to make markets work well for businesses and people now and in the future. And that means that we very much look not only at short-term effects on prices and output, but also on long-term effects on innovation. So therefore, in all our actions, particularly in the payment industry, key is contestability of markets. We want markets to be open, and we want markets to avoid protect them against tipping of markets towards one or perhaps two dominant players. So in that context, we run, I would say, kind of typical enforcement actions. One is, which is in the public domain, is an investigation whether access to NFC chips should be mandated for e-wallet providers to stimulate competition among e-wallet suppliers in the market, and also to stimulate innovation in that area. And another investigation, it's also in the public domain, still ongoing and undecided, is an investigation into Apple's conditions to its App Store, in particular with respect to the choice of payment service providers for in-app purchases. So these are two typical examples of enforcement actions in this area. It's important to stress that this is something that we're not doing alone by ourselves. We work closely together with the European Commission, in particular DG Comp, but also with colleagues in other member states, other national authorities, being it competition authorities, financial authorities, or consumer protection authorities. And finally, apart from typical enforcement actions, we also do several market studies. And most recently, we concluded a study into the role of big tech companies in payment markets, which we can discuss perhaps later on. But this is kind of a typical market study that our authority conducts. And on the basis of that, we do recommendations for policy changes. So this is in short what we are and what we do in this area.
But just for the audience, Martin, would it be fair to assume that, I mean, it's not just you in The Hague that fantasize about stuff, I mean, because you are part of the European Competition Network, so it would be fair to assume, I would guess, that anything you guys do would sort of supported by competition authorities in the network, right?
Is coordinated with competition authorities? Yes and no. Yes, there is an active coordination within the network with the European Commission and the other competition authorities in the member states. But of course, it's our responsibility and remains responsibility. So the things I say and do that we as an authority cannot be. There's no implicit or implied approval by the other competition authorities, just to make that.
Of course, it's not black and white, but okay, we'll come back to that. So a few minutes, Eric, I tried to get your second slide on the why of the retail payment strategy. If we can share that, so that would be probably be helpful for you to briefly explain to those that did not. See, thank you. I chose this one, Eric, for you to use to explain briefly about the RPS.
Yes, thank you very much, guys. Good afternoon, everyone. My name is Eric de Coulombier. I'm a head of unit in the European Commission. I am not in the competition department. I am in the financial services policy and financial stability department of the European Commission, and my main responsibility is with retail financial services and payment services. And it is in that capacity that my team had the honor to put on the Commission's table a strategy for retail payments in Europe, and that was adopted on the 24th of September of last year. And yeah, we had been watching the payments market for a while, and we have observed very significant transformations of the payments market, which, in our view, merited a full-fledged strategy for the EU. So payments have become critical for the economy. I think everyone realizes that. And in fact, the more digital they become, the more critical, the more maybe vulnerable payments become, and the interrelations between payments and the economy are now, I mean, obvious for everyone, and whoever controls payments has a good chance of controlling the economy. So in that respect, it has become an element of strategy, of open strategic autonomy, as we call it in the EU. The payment sector, I mean, nothing new for you. You all know that this payment sector is evolving very rapidly, high speed. We are, I mean, crystallizing the latest state of innovation, and that brings a lot of new opportunities, but also new risk, which have to be assessed and addressed. So we've also sadly observed the absence of European champions in the domain of payments, at least as regards the front end or the end user side of the ecosystem. We can see that the possibility to pay cross-border in Europe are largely, not only, but largely offered by global players, card schemes offering cards which can be used throughout the EU. And that's a fact. And that's something that we would like to see addressed and change because of the critical importance of payment for our autonomy. We've also observed a strong fragmentation of the payments market with myriads of domestic, sometimes very efficient, very popular, but very domestic payment solutions, even those based on the latest technology, on the mobile-based instant payments-based solutions. Most of what exists today in the EU do not cross borders. I'm sure you all have in mind very successful examples like Swish in Sweden or Bizum in Spain. But try to use them beyond the Swedish or the Spanish borders, and you will see exactly what I mean with fragmentation. So, and that's why we've been very interested in watching the emergence of the European Payments Initiative, which Martina just described, because this is so far the main the most significant initiative of a homegrown pan-European payment solution that is in the making, and it's not even a question of interconnecting existing payment solutions, but it's creating new ones from scratch, maybe with existing structures, but the solutions would emerge from almost ex nihilo. So that's really something which I would say goes very much in line with our own vision for retail payment strategy for Europe. And so all this to say, Kees, that we thought it was about time to develop a kind of overarching strategic vision, which can also be a blueprint. So if someone in a few weeks, in a few months, in a few years looks for reasons why we are proposing this or that in the field of payments, probably the source of all this, the root of all this, would be found somewhere in this 25-long retail payment strategy for Europe, which I would, of course, invite everyone to take a good look at.
Thank you, Eric.
Thank you.
Okay. So after all these introduction, I guess it's time to go to a little bit more interactiveness. First, Martijn, I would like to start with you. We're not going to dive directly into the EPI because I see lots of questions which are very concrete about would the interchange in EPI be lower on debit than it is today. We'll see if we can come to those questions. So, but first, you already alluded to the study that you yourself as ACM did. And indeed, those who have read a statement from the European Council of last week have also seen that they also expressed their concern about restrictions that operators of technical infrastructure might pose, like the NFC chip. What do you see happening there?
Yes, maybe to take one little step back is that we conducted the market study in the Netherlands and saw that, you know, a competitive market in the Netherlands, in particular driven by the success of Ideal, which is kind of a non-card domestic payment system, which works well. And is one of those, I think, domestic success stories that Eric alluded to. But we see at the same time that big techs and big tech companies are, though not omnipresent in the Dutch market, are either at the doorstep or just beyond, or ringing the door, or out on the pavement about to enter the door. So we see that companies are very interested in entering the payment markets one way or another. Usually not, the strategy is usually not to go in with a big bang, but we foresee a more, I would say, you know, a gradual entering into the market. And for that, I think we as competition authorities need to be prepared. So this is one of the reasons why we very much support the EPI initiative, because I think this is one of the possibilities to make markets and keep markets competitive, and continue to offer consumers and merchants plenty of choice. Second, what we advocated as a result of the market study is a sort of level playing field. While we have access obligations on banks, we feel there should also be access obligations on holders of critical infrastructure, technical infrastructure, being it platforms or handheld devices. So we believe that our regulation should be adjusted to that. And thirdly, we very much welcome the introduction of the Digital Markets Act, which is specifically targeted at gatekeeper companies, and that includes ex-ante regulation, access regulation to designated gatekeepers in a way that does not require full-length competition investigation, but it is a regulatory instrument that forces access to such infrastructures of gatekeepers, again, to keep markets open, to keep markets contestable, and to stimulate innovation.
Okay, that's a lot of challenges ahead. I'd say, Christian, I think, and correct me if I'm wrong, Martijn, that in that study you conducted as ACM, it showed that the biggest concern of traditional banks in respect to big techs is that they would lose all contact eventually with their customers. Total sort of disintermediation. I haven't, to be honest, heard Mr. Schäfer being concerned about that. He's always pretty optimistic. Is that correct, Christian?
I think it's a matter of perspective. First of all, competition is good to foster innovation, to keep us on our toes. Yeah, and in that respect, I think we welcome competition from all angles. That having said, if you look into the field of payments, competition, I would primarily, and the concerns that have been rightly raised by Martijn, in the context of retail banking. There, of course, you really have a significant issue and threat of losing customer contact, not only with regards to payments, but also then in terms of forward integration into other payment products. Yeah, and that I guess is the reason why it's important here to come up with solutions like AP, which banks should really join as soon as possible and make it a European solution with a lot of penetration. But it's also a reason for us to stay innovative. Yeah, myself being a corporate banker, I would say competition from big techs is a bit more distant. But I guess it's better now to have a European solution on the retail payment side to keep them out of my courtyard as well. Yeah, and lastly, if you look into the interbank space, particularly where it comes to cross-border payments, you already see a lot of competition, not from the big techs, but from other fintechs in that area, kind of coming up with more innovative solutions. And here again, I guess it is the banking industry that needs to come up with better solutions. Yeah, with simply better solutions that customers and corporates and banks would prefer those solutions over those from the competition from other markets.
Thanks. I think it's about time that I keep my promise to Dave Burge already during the presentation of Eric. And that's another question also from Dave, but there was one, and that's one I think meant for Martina. I think Dave said, well, why on earth are you guys with an EPI still bothering with cards? I mean, that's old school. What is the logic there? You're on mute, Martina.
Yes, I love that question because honestly, I mean, we studied it for quite a long time. And of course, it would have been much easier to say, oh, let's just go for an instant payment solution. But the truth is, and especially now reinforced with the pandemic, that people love their cards. With contactless card have received an additional boost. And if you look at the numbers, I mean, there is no debate possible. If you don't offer cards, then maybe you will be a very attractive niche solution, but you will be niche for a very, very long time. That is not our purpose. We would like to become mainstream, and we really consider that the European consumers deserves to have this choice. What we are offering is the real choice, meaning if you don't want to use your card in the future, you are free to do so. If you want to benefit from two payment means, you are also free to do so. So it's for everybody. And if in the future, or depending on your market, you feel like you are happy with your digital end-to-end solution in the API wallet on your mobile phone, great. Then just do it in this way and you can fully function like this. I think we have to have in mind that the market environment is not everywhere the same. There are markets which are more ready for this than others. There are also more use cases which are more convenient, of course, for instant payments. Instant payment has the advantage to be able to cover everything and would be a real addition also on the P2P and P2Pro side. But nevertheless, we should not underestimate the power of cards, the presence and the volumes of cards, and also the request of the merchants to say we want an alternative to the current card schemes and to card functioning that we see. So that's the reason why our conclusion was pretty much straightforward. To say we need both, even though we understand, yes, there's not the same challenge everywhere and it's not the same market environment everywhere.
But would it still be cards running on cards rails or cards producing instant payments, Martina?
It would be cards on cards, but the clearing and settlement would go progressively through instant payments. First for the cross-border side. So where today you only can work with Visa and MasterCard, there where we foresee to offer instant payment, clearing and settlement, but running on card rail. So it's a card transaction. We are not disguising a card transaction on an instant payment rail. We are building up the schemes and rules for this. So we are leveraging the EPC instant payment rule book, but we will also add additional rules which are absolutely necessary if you want to bring it to the retail space tomorrow, because the rule book in itself is not enough.
So coming to the instant payments, looking at Eric, if I recall correctly, there was a lot of response to your retail payment strategy, about 189, I believe, responses, or at least 189 of the responses said that instant payments should be made mandatory, and you have just sort of sent out a, let's call it, consultation on the desirability because if instant payments need to be the new normal, it's not a given that the market will achieve that all by itself. What is the Commission's view there?
Yeah, we are currently working on various obstacles, enablers, which we believe would be indispensable to promote, stimulate the emergence of instant payments. So for the moment, we are not minded to come up with a kind of quick fix, which would be to mandate every bank or PSP to offer an instant payment solution. That would be easy, at least intellectually, but this is not the logic that we are following. We are rather looking at all the reasons why instant payments are, in some cases, neither proposed by PSPs, or when they are not used or not popular with customers. So we are looking, if you want, at instant payment from a more holistic way, and not just via the small concept of replacing what is currently a mandatory scheme by a possibly to replace what is currently an optional scheme by what could be a mandatory scheme. So we are looking much more at all the ecosystem around instant payment. And let me give you a few examples. When we discuss with the banks, we know that they are facing some concrete challenges before offering instant payment, like, for example, how to reconcile instant payment with their screening obligations, which have to be complied with within a few seconds. If we discuss with consumers, we know very well that they are concerned about the fact that instant payment being instant, the money is gone. And if there was a mistake made, if there was a fraud, what happens? What happens? What are the safeguards? So if you want, we're looking at the whole ecosystem and not just at coming up with an obligation. We are also seeing how we can nudge, if you want, the market to move towards instant payment by itself. And we can see that progress is already quite good. If you look at the adherence figures from the EPC, although they could be better, clearly, especially many years after the launch of the scheme, but figures are growing. They are good news coming soon. So it's relatively okay, but we'd like to, of course, to accelerate things, and we are.
And we'll see what the reactions to the ongoing consultation will be, and then you will take any measure you see fit, of course. Looking at the challenges, we were discussing challenges. I mean, these are, of course, tremendous, and we made a little poll, but according to Martina, there were the wrong answers that could be chosen from, because Martina said that the biggest challenge is continued national fragmentation, that the biggest challenge or threat, if you will, for EPI is exactly that. But that, for me, that ties into another thorny issue, which is the business model. There needs to be any homegrown solution. Eric will also understand that needs some fertilizer to make it grow. And well, I don't want to use the IFR word, if you will, but this fertilizer is always a very delicate thing, how to balance that within a let's say a four-corner model. Christian, we have had those discussions also in another context. What is your view on how to share? I mean, we all want to unlock value, but how to share that?
I think if you want to discuss the question of fertilizer, there are three different ways looking at it. The obvious one is an intense discussion we also had in the context of AP, bringing a business model to instant payments, I think we had an intensive discussion, and it's key that you come up with a business model. And if in the context of the SEPA API access scheme, where you want to develop on top of PSD2, initially with payments, but then go into other asset classes, a kind of four-corner model where the value creation is on the asset holder side, on the retail bank primarily, and the value appreciation is on the merchant side, on the asset broker side. There needs to be a way of value distribution between the actors. Yeah, and considering the complexity and the number of institutions involved in Europe, I think the only way is to do this via a central kind of pricing and remuneration vehicle, and interchange might be an obvious indication that this is a solution, but it can't be bilateral agreements. So there is more work required to really come up with sustainable business models, not only for AP, but also whatever you want to consider beyond what you have in open banking.
Do you have any? Oh, sorry. No, I just was looking at Martijn, who was paying a lot of attention, I think, to what you were saying, Christian. What? Of course, you cannot advise how to solve that puzzle, but how are competition authorities looking at it? I mean, we have policy goals. We want great European payments, but we also need a viable business model, which is not easy to reconcile, right?
True, it's a thorny issue. And the right balance has to be. We need to strike the right balance here, and there are different interests at stake. Merchants, consumers, banks. There is also when you talk about digital sovereignty, and in Europe, that's also a long-term perspective. So I mean, it's a very complicated issue, and something that perhaps also the competition authorities cannot do by themselves, but should be done by regulation or by law, by democratically elected officials, who can balance the different pros and cons and have that long-term perspective, take that into account.
Okay, so then looking, yeah, go ahead.
Will you allow me to comment on that one? I think what was very inspiring in the EP context is the open discussion we had not only between banks but also with other stakeholders, transforming that on what is happening with the ECB on the ERPB working groups, where SEPA RPX scheme is one. You have all stakeholders, and I can only say what I said. Typically at these kind of events, I guess the communication between the private side and the public side had never been better than today. I think the sheer fact that the Commission comes up with a vision about the payment markets, which shows the full consultation of all actors, is really a good foundation. And I guess we, as the different actors on the continent, need to come together to jointly look at issues. And we have difficult change in front of us. I'm gladly that Martina is spearheading the AP side, which I guess is a very first important step for us in Europe, but there are more steps to be done, and we can only do that together. And it requires change by everybody, including policymakers, as well as the public side.
Thank you. Very inspiring. And indeed, Eric, some say, well, this stuff like EPI has been tried before, a European card payment scheme. It has all failed. Why would it work this time? And we have had these discussions. Something is distinctly different this time, and I think it ties into what Christian said. What is different this time, in your view?
There is perhaps today an alignment of planets that wasn't in place or wasn't the case 10 years ago. There was always one planet which was not aligned with the others. Maybe it was the Commission planet, or let's not go back to history. But I mean, now, as Christian said, there is, I think, an unprecedented alignment of views. Let's not use the metaphor of planets, but alignment of views between private and public authorities. If you look at the European Council conclusions published a few days ago, you will see clearly this alignment of planet. What I mean by that, I think I can safely say that I could have written these conclusions myself, being in the Commission, and these have been adopted by the member states. And when I discuss with members of the European Parliament, I can also sense huge enthusiasm for this collective work that we are all embarked on with retail payments. And when I talk to the ECB, same thing. When I talk to the market, in all its diversity, I can sense the same urge to act and to act now. There's a kind of feeling that it's, I wouldn't say now or never because I don't want to be overly dramatic, but there is this feeling that we are living now a critical moment, and there is a window of opportunity to move forward with something big. And this is exactly what we are observing. Yeah.
And my question would be, Eric, picking up on that, really the first time I read about the sovereignty issue, which made payments so important, was in the Commission communication of December 2018. If you will recall that, probably you wrote that part of the communication. But that's already more than 2 years and, well, let's say 3 months ago. What do you think is the pace of change? Is it going fast enough? I mean, there's a lot of goodwill and we're doing a lot of stuff, but are we moving at a pace that you would expect to be satisfactory?
Satisfactory, yes. Well, we
to reach the policy goals.
I mean, we know that. Sorry about these metaphors, but we all know Rome wasn't built in a day, and we know that we are. I mean, the fact that these planets have been aligned now it didn't go without some work and some persuasion work, some discussions between all the various stakeholders, private and public. So it has taken some time to get to where we are now. Yes, things have moved pretty quickly. I mean, one can see in these two years and 3 months, we have seen the emergence of new actors in the field of payments, which we are not until now known as being interested in payments. And someone mentioned the big techs before, big techs from East and West. They are now entering our doorstep, as Martijn said, and some are already in, maybe with some niche activities, but I sense this will grow because increasingly the payments market is based on data, and data has become, everyone knows that, the new oil. So it is no surprise that these companies are now interested in payments for the data that they generate, also for the activity itself. When they offer other services, payments can also be a means of offering a kind of package type of service. So this is new. I mean, 2 years ago, I don't think we had, the Libra or DM initiative. I don't think we had, the emergence of Apple Pay or Alipay or God knows what. So this combined with the COVID-19, which has increased, accelerated, sometimes aggravated all these phenomena. So this has, that has created the situation we are in now. And we were very right to link sovereignty to link autonomy with payments 2 years ago. And if that were to be written again this year, we would exactly say the same. And that would probably be written even in bigger letters, because that's clear. That is not clear to everyone. Maybe at the time people said, maybe the Commission is exaggerating a bit with that. Payments are just payments. But I think now no one would even think 1 second before adhering to this statement. But
looking at Martijn, sorry to interrupt. So we talk about this European champion. Don't we run the risk, Martijn, that we are creating, and better close your ears, Martina, that we are creating a European monopolist here?
No, I mean, in theory, yes, there is that risk, but I think it should be designed in a way that markets continue to be contestable, that there continues to be sufficient incentives for innovation in all areas. And I think that is the challenge. But I do see that is possible. But it is an important element in. And this is what I said earlier, is that this difficult balance between short-term interest, long-term interest, public policy interest, sovereignty, kind of international autonomy and independence interest, and these need to be balanced. And I think it is important that we are an independent competition authority, and this balancing goes beyond our mandate. This, a democratically elected legislator need to decide on, what to give priority or not. So it's great that we are independent, but the downside, or if you say the upside of being independent, is that we have a limited mandate, and this does not include this. We are not capable of making, I would say, industrial policy decisions. It shouldn't be.
Yeah, thanks. No, I fully understand that, and I wrote to Eric a long time ago. I heard one of the competition commissioners say when he was addressing the General Assembly of the European Payments Council that the policy goals could be best achieved by what he really said, an intelligent combination of regulation and competition law enforcement, which is probably true. But that the third pillar would be, of course, a viable business model, because you can have a regulation and competition law, but still somebody needs to have that fertilizer to make it grow. And coming back to Martina, as you rightly said, continued national fragmentation is, of course, one of the biggest, might be one of the biggest inhibitors for EPI. And how would you, let's say, because all the business models and the market circumstances in terms of fees and profitability in payments are pretty different in various markets. How would a sort of European average be achieved? Because that's probably what you would need to make it work pan-European. You would need a pan-European business model to fit all the needs of all the communities throughout Europe. How will that work?
I think, well, by setting up this common infrastructure, this common solution, we create, I would say, a common cost base. So it's cost plus a reasonable margin, I think, that we should target for. And by putting it together, we can reach this. Also by being transparent on it and clearly showing also what such a solution costs. Again, we need some margin because innovation has to be financed in the future. And I think it's in the interest of everybody that we do so. One of the reasons why so many domestic card schemes are not able to compete anymore is because, well, they are not profitable. They are not generating that margin or that capacity to innovate. And unfortunately, the digital solution, besides some exceptions, didn't really take up where the card schemes failed. So we have to reinvent this. This is now a great opportunity really to create that transparency of the cost side and to really show what the European solution would cost and how it would look like. It also, through one setup, allows to have for everybody the same cost, which of course then raises the challenge of how do you harmonize even the business model side or the diverging situations that we see right now in Europe, which is definitely one of our challenges, which we are working on to see how we can manage this migration over time and coming to a European average, as you said.
Mm-hmm. I think maybe that's a pretty good question from Lou Zorowski. He asked a question: if anyone has calculated what the industry-wide migration to EPI might cost across Europe, is there any best guess there?
Yeah, I mean, I think within API, we have a very good view on what is the global cost. Of course, you have to distinguish cost for what. Is it to build the central solution? Is it to roll it out on the issuer side? Is it to connect the processor? Is it to build up the acceptance network? Or is it all these things together? And for how many markets? These are basically the drivers that you need to consider. So I think we know how much it costs. And I can only tell you that the most expensive thing is to build up the acceptance network. Just imagine, in order to have a European brand accepted, you like it or not, And whether it's for instant payments and not, and that's something where I think there's a lot of misunderstanding in the market. You need to sign contracts with merchants. You need to get the brand out there. You need to do the whole decal, so making it visible on the point of acceptance. So that part only, and I'm not even speaking about rolling out a European standard, so making it available and integrated in the various interfaces, that costs money. The issuing side is a little bit easier to handle in the sense that once that the banks have made the investment of upgrading their systems to instant payments, you can roll out the solution progressively. As much as the appetite grows in the market, you don't have to push for a big bang scenario, which would be certainly dreadful. And also, we should not forget that payments requires trust. Trust is not something which you just mandate. Trust is something that you build up. So we have to prove to the market that we bring value, that this works well, that it is safe, and then the people will adopt it. And we are convinced, by the way, that this will also go through P2P, because the people will experience with small amounts, little transactions, this works nicely, and then they will adopt it in other use cases. I'm just saying these things because I see so many misunderstandings or misconceptions, which are really, I mean, they're not proven. We have a lot of examples in Europe, and we have a lot of knowledge in payments, and we made our experiences good and bad. We should learn from this. And this is a unique opportunity we have right now, bringing together this know-how, these good experiences, and trying to do better what failed in the past.
Okay. This is a nice bridge, Martina. Thank you for the explanation. For our final question, because we have only a few minutes left, and I think there's a good question that came up from, unfortunately, anonymously, and it reads: the EPI team is made up mainly from bankers and people from national domestic networks. Is there not a risk of repeating the same mistakes of the past when the barriers that domestic patterns have created need to be broken? So that would be my last question to you all. What do you say to that question?
In the solution, I don't know, people are maybe not fully informed, but in the interim company, we have a great mixture of profiles, actually. Yes, there are people that are coming from banks. There are people that are coming from national infrastructure, from digital solutions of the different markets, from domestic card schemes, but there are also a lot of freelancers. I would say even the majority is now from the freelancer basis, and many have nothing to do with banks so far. So people are coming from these diverging horizons, and also I think we should not underestimate how much knowledge also on the technology side is needed. So where we also appealing to external players. So it's only that mixture that I think can bring us to a very valid and interesting solution for Europe. It's not to leverage.
So your answer would be no, that danger is not there. It's a very diverse workforce that you're leading here.
So you need the mixture. Yeah. Absolutely. Okay. Absolutely. Yeah.
Okay, we need to try to finish this one. We had the last poll, which read: when will Europe have a homegrown alternative payment solution with substantial scale? Let's not discuss what substantial means. Let's say it's out there. And there were three possible answers: 2026, almost 46%, and that's good news for you. Martina believes that in 2026 already you will have reached a substantial scale, which is good. Another 40% to 231, and there's the pessimists that say never, but that's only 14%. So I guess by 2031 you're probably a vested solution in the market. So we need to finish in 1 minute or so. There's one last remark or observation for all of you. And after that round, I'll give back the camera to Gonzalo. But first, Martijn, any closing observations, remarks, good piece of advice to, let's say, to Martina, because our hopes are vested in Martina, because she is
I was about to say, good luck, Martina. Where we can support you, we will.
Okay, Christian.
Yeah, thank you.
Christian, you're on mute.
finally. Thank you. I think we all should stay safe. I guess that's the most important one. And second, hands on deck for Martina and AP.
Okay, thank you. Eric?
Just a call to everyone listening to us to do this with us. I mean, we don't have at all a top-down approach. We want to follow very inclusive policy making. So please engage with us. Do that with us. Thank you.
And Martina, you have the final word then.
Yeah, the final word. Well, thanks a lot for your best wishes. Indeed, we can use it. We can really need that one for the realization of this. It is a complex undertaking. I think what we all have to be conscious about is we are in a market environment which has already existing structures or usages and patterns of habitants. If we don't give up things at a certain level, it will not work. We all have to make some sacrifices here, but I think the opportunity overall is much bigger than what we have to give up for. And we have a fantastic moment because we have so much knowledge in Europe about payments. We have this great opportunity around instant payments and this whole regulatory environment. So I would say, maybe not as Eric said, the planets are aligned, but we have a pretty good environment and it is only up to us to leverage it. So it's a good moment.
Yep, as I like to say, let's make European payments great again. Okay, so by that we finish this panel. Thank you all very much, Martina, Eric, and Christian. To be continued, I would guess. So hopefully till one next opportunity to discuss further. And Gonzalo, back to you.
Yes, thank you very much, Gijs. Thank you very much for moderating a very interesting panel. Thanks all, Christian, Martina, and so very much appreciate to everyone for a very interesting discussion on what is surely to be a continuing project and developments. And we'll keep broadcasting as we see fit in the future. So for those of you who are, again, within the GPS community, thanks for joining us today. Remember that we have several other channels where you can subscribe, follow us, the YouTube, the LinkedIn, and this GPS virtual community will send out the links, so that will make it easy for everybody. The next GPS Asia Focus Spotlight will be in only a few weeks' time, April the 15th, and it's going to feature MasterCard session, especially looking at the real-time payments and highlighting especially a cooperative and collaborative use case in the Philippines. So look out for that. We'll be sending some emailers and some messages on that very shortly. Again, feel free to follow us on the channels that I've just mentioned. And also, last but not least, something that many of you might be quite interested in is our flagship event, the Central Bank Payments Conference, which will be held. We are very optimistic, of course, that people are eager to travel, that people are eager to network again, and willing and wanting to have face-to-face meetings as we are. So we're looking forward to meeting many of you at a very central bank focused issues and challenges that we will be covering. We will be looking at cross-border payments, especially on the top level, cross-border payments, financial inclusion, CBDCs, of course, which came up quite often today, as you've noticed in the questions, and also the payments functions in the central banks, which we see are changing over time. We've noticed that the currency function and the payments functions seem to be consolidating, and there's a lot of discussion on how that should be oriented. So we're looking forward to covering that content in November in Athens, Greece, and you're all cordially invited, and we will have information sent out to you. So in the meantime, thanks from Currency Research and everybody and our panelists. Thank you all for joining. Stay safe, stay well, and we'll see you here and hopefully very soon in person.